Welcome back to Real Estate Mindset. Today's video is gonna be absolutely bonkers. Now we have breaking news. We finally have our first metro area to experience a home price crash, you guys. So I'm so excited to finally be reporting on this. Now, first, what we have to do though is we have to define what a crash is, because as you know, there are so many differences of opinion as to what a crash is. And what I'm talking about specifically is a crash in home prices. So before I define what a crash is, let me first give you an example of how much things need to go down in order for things to get back to pre-pandemic levels. And what I'm going to do, guys, before I go into the why and how Austin actually is already crashing right now, let me show you this example using a basic calculator. You guys can probably tell I'm super pumped up about this video, but let's take a $500,000 house. Okay, so back in 2019, there was a $500,000 house. Let's say that house went up in value by 40%. Okay, so times 40%. All right, which is 0.4 equals 200,000. So again, if a $500,000 house went up $200,000, that's a 40% come up. Okay, so you guys follow me? So the original price of 500,000 went up 40%, which we just found out is $200,000. So fast forward to right now, 2022, that same $500,000 house is now worth $700,000. That represents a 40% come up. Now, here's the point. We don't have to go down 40% to get back down to 500,000. All we need to do is go down a little less than 29%. Let me show you. Let's take 700,000 times 0.29, which represents 29%. That equals $203,000, which represents the amount of equity that the $500,000 house went up. So you guys see, if a home started at 500,000, it needs to go down less than 29% to go back down to pre-pandemic levels. Now that we have that in perspective, let's define what a crash is. Now, in my opinion, and what I'm going to say, let's just do a uniform 15% from peak. If a home goes down 15%, or rather an entire housing market goes down 15% from peak within a year, let's just call that a pricing crash. Because remember, look at all of these people that say real estate only goes up in value. It only goes up in value. 15% is a substantial drop for anyone that has recently purchased real estate. So let's go into the why is Austin crashing right now, and how did Austin get in the situation to become the very first city to start the housing market crash. So where we're going to start this video, you guys, is talking about overvaluation. So we're going to take a look at the price growth for Austin just to see how much Austin really blew up in value and how much it should have blown up compared to where it's at, so that we can figure out how much Austin is overvalued right now. Take a look. All right, guys. Now, in order to show you guys the overvaluation, I'm going to bring up Redfin's data. And what we're going to do is look at what the value was essentially in October. Okay, so I'm going to go a little bit further back to right here. So the value of homes in 2019 around October was $327,000 in Austin. Okay, so that spiked up. So here's, from October to the peak, which is right here in May of 2022. So a little over 2 years, about 2.5 years, the median sales price went from $327,000 to $574,000. You guys, the difference is $247,000, which essentially means in about 2.5 years, Austin went up 75.5% in value in less than 3 years. 75.5% in value. Now, if we look at the fundamentals of equity growth and we kind of match that up to wage growth, Austin during that time should have only gone up 12.5%. which essentially means, in my opinion, if we look at just wage growth, Austin is roughly overvalued by 63%. It's a little bit less than that, but I'm saying that there's still room for home prices to go down in Austin an additional 63% because it went up 75.5%. Now, obviously, when we do the math, it will be a little bit less than 63%, but I wanted to give you guys just basically simple information and simple data so that you can understand just how much Austin blew up in value. Again, in order to have a steep crash, we need something to be extremely overvalued, just like Austin. So now we have to ask ourselves, why did Austin become so overvalued? And you have to remember the number one reason people move is for employment. And what happened in Austin is essentially the job market exploded, especially with tech heavy jobs. Not only that, you guys, Austin ranked as the third best performing metro area for employment growth in the US since 2021. Austin Round Rock has gained more than 90,000 new jobs since 2021 for a job growth rate of 8%. Now, according to the Wall Street Journal, many new residents are coastal emergees, drawn by the region's booming tech industry, lack of state personal income tax, and laid-back atmosphere. As one tech entrepreneur who relocated to Austin from the Big Apple observes, the cost of living is 40% less than New York City, and everyone here is incredibly friendly. So a lot of people that move to Austin are saying that it's a lot more affordable to live in Austin. So that's another problem. Once affordable Austin became no longer affordable. But let's take a look at a few, you guys, just a few of the tech companies that are headquartered in Austin, just in case you didn't know. And this right here, you guys, is why Austin is going to crash even more, even harder. And it's the first one to crash. Look at all these tech companies. Tech is taking a beating, just like the real estate industry. Look at this. Regional headquarters in Austin include AMD, Apple, Dell, Cirrus Logic, Home Depot, LegalZoom, Oracle. This is crazy, you guys. Plus also Amazon, Cisco Systems, eBay, PayPal, Facebook, Google, HomeAway, Xerox. You guys, that's just a few of many tech companies that also have operations in Austin, not just headquarters. So essentially, Austin has become Texas's own Silicon Valley. Unfortunately, we're headed into a recession, and unfortunately, job loss has already started, but has not accelerated to where it's about to be. So, in the numbers I'm about to show you, understand it's not even including the job loss, recession, or 7% interest rates yet. But as a result of a booming tech job market in Austin, people flooded Austin from all over the nation. And as you can see here from this map by Redfin, this is a migration map. You can see people coming from all over to Austin, you guys. Bay Area, Los Angeles, Seattle, Chicago, New York, Washington, Boston, San Diego, Portland, Denver. They're coming from all over the place. We had a huge migration into Austin led by an outperforming job market. As a result of that, the other thing that happened, guys, is investors rushed to Austin. Why did investors rush to Austin? Because they saw rent exploding. So the fact that the investor stake in Austin and Texas right now it's astronomical. So I'm just talking about Texas here. Austin, depending on the zip code, could have 40 to 50% of investor share, you guys. So not only are people migrating here for tech jobs that are completely gutted right now, a huge investor share was taken in Austin and overall in Texas. Look at this. Texas had the highest rate in the US, 28%. You guys, 28% of homes sold in the entire state of Texas sold to companies and corporations, otherwise known as institutional investors. That's more than double the national average of 13%. So they're flooding to Texas because it's obviously still affordable here. The job market was absolutely popping. So now that we're in this recession, guys, and now that they can't get rent, guess what? Those investors are going to start fire selling their properties to liquidate so they can avoid shutting down. And all of those people that just migrated, guess what? Facebook is laying off 15 15% of its staff. And that's going to be a domino effect for all of the other tech companies that I just listed. So all of the people that migrated to Austin, they're about to lose their job. Work at home jobs are about to be doomed. Once that happens, Austin is going to lose even more value in their homes. And I haven't even got to that part yet. We've just defined 15%. Towards the end of this video, I'm going to show you how much value that Austin has now lost. But before I do that, let's look at the dropping rents. Let's look at the increasing inventory, months of supply, and the new builds that are going on in Austin, because you guys know that I'm saying in order for a city to really crash nicely, it also needs to have overwhelming new construction as well. So I'm about to show you guys these things right now. All right, so let's start with rent. And the fact that rent is going down in Austin, you guys, is going to cause even more investors to start fire selling their properties. And as you can see here, all right, let's just start at, where the rent was at the peak. The rent at its peak, guys, was at $2,707. It's now plummeted in just 1 month, and this is lagging data, to $2,505. So what this is representing, you guys, is a 7.4% decrease in rent. So all of the investors that have recently priced in the higher rent are no longer getting that amount of rent. And here's the thing, this data is only to June. This data is lagging, and already rent is down for all of these investors with this massive stake. It's down. And you guys, it's going to get worse. The new builders are building even more multifamilies. So as soon as those are done, there's going to be even more inventory. But let's now look at inventory for Austin so you can see another contributing factor in why Austin is crashing right now. All right, here's Redfin's active inventory. Now, the low for inventory was in February at 4,069 units, as you can see here. Now, that peaked up all the way in September to 11,742 units, which essentially, guys, represents an inventory increase. You guys ready for this? Of 188% in about 7 months. So in about 7 months, 188% inventory increase in Austin. That's one of the reasons why it's crashing. But look at the months of inventory. All the months of inventory is even more revealing. So right now, as far as months of inventory, they have weeks of supply for some reason, but months of supply, we'll just say months of supply right now is 5.5 months in Austin. We technically need a little over 6 months for it to be considered a buyer's market, but this is all lagging data. But as you can see here, we already have 5.5 months of supply of inventory in Austin. And this blue line represents right here 2019. So you can see pre-pandemic, we have more inventory in Austin than we did pre-pandemic. Pre-pandemic is right here. Look. Pre-pandemic's right here. End date January 27th, 2019. They had 19.3 weeks of supply. Fast forward to right now, 20.5 weeks of supply. If you're in Austin, if you're a renter in Austin, congratulations, you're about to win, because now we have more inventory than pre-pandemic, and I haven't even got to the price crashing yet. Take a look at new construction. Y'all, I'm just going to use Lennar, and I want to show you that there is a ton of new building going on right now. Obviously, Lennar is not even the #1 builder in the nation, but I've highlighted where all of the communities in Austin are. I mean, it's crazy. They have 16 communities. Only Lennar has 16 communities right now in Austin. So as the demand continues to get destroyed in Austin, guess what? More inventory is going to come on the market, especially from new builders. And those new builders that can't sell their houses, they're not set up not to sell. If they can't sell, they will have no choice but to liquidate and fire sell to stay in business. So in other words, things are only just begun. But let's get to the best part right now. Let's take a look at the price drops, the price crash in Austin. But before I go from peak to trough, let's look at some Zillow data. Now, right now, Austin is the #5 metro area in the entire nation to experience month-over-month price decline. So right now, on a month-over-month basis, Zillow is showing 0.94%, followed by Riverside, New Orleans, Las Vegas, and Phoenix. So these other 4 metro areas are obviously in danger as well, you guys, but on a month-to-month basis, 9.4%, that represents 10% per year. The thing is, guys, it's only going to speed up, and I'm going to explain that at the end of the video, but take a look at the price drops from peak to trough now. All right, guys, going back to Redfin. So here's the peak. The peak was in May 2022, May 22nd of 2022, Austin peaked at $575,000. Fast forward to right now, you guys, this is crazy. Fast forward to right now, I'm ashamed I didn't report this sooner. The house values $476,000. That represents a decline. You guys, listen, 98,000. Austin has crashed 17% from peak. You guys, 17% from peak. And look at this. This orange line represents 2021. It's only a matter of probably a few more weeks before Austin finally shows year-over-year price decline, and the crashing housing market can no longer be hidden. And Austin is going to be the first beacon from a metro area that's signaling price crash right here, right now. It's not quite under year-over-year price decline, guys, but look at how close it is. In a few weeks, this is going to be under year-over-year price decline. But again, you guys, if we define a crash as a 15% decline from peak, Austin is already at 17%. Now, here's what I really want you to consider right now, okay? What happens when the recession is confirmed, and what happens when layoffs begins, and what happens when the fear starts spreading to the sellers? Think about that. It's only going to get much, much worse. So if you're a renter in Austin, guess what? You're about to win, because rent is going to probably continue to go down the more we get into 2022 and into 2023. So again, you guys, I may actually buy a house in Austin. I don't know, but my eyes are fixed on Austin, because more than likely it's going to overcorrect, and there's going to be crazy deals to be gotten in Austin. Now, other than that, you guys, I hope you found this video very valuable, and I hope you got some insights from it. And other than that, if you guys are out there investing in real estate, you know I wish you luck, and I hope you win.